Hi, it's Derek Lew, chairman of Blue Star Capital. I'm joined here today by Matt Lodge, one of the founders of Blue Star's portfolio company, Dynasty. Welcome, Matt. Can you please offer our listeners an overview of Dynasty?
Sure. Hi, Derek. It's great to be with you. Thanks for the invitation. So Dynasty is a gaming and media infrastructure provider. Our partners are large telcos, large media organizations. Essentially, what we do is white label a platform ecosystem that enables them to engage their customers, to reduce churn, and to monetize their customers all under one platform environment. So Dynasty provides its partners with an opportunity to participate in an industry, as you well know, Derek, and anybody around this industry knows, is now twice as big as movies and box office combined.
Well, Matt, that's really interesting, right? Because as many of our listeners know, Blue Star has been invested in a portfolio of esports companies, including Dynasty since 2019. And when people think about esports, quite often they think only of the teams and the competitions, which obviously Blue Star is invested in with one of our portfolio companies, Guild Esports. But one of the biggest growing areas and biggest opportunities that we've identified within esports really is all of the infrastructure that's required for these competitions and for people to interact with one another. And Dynasty is such an opportunity. So obviously things have progressed a little bit since we first invested in Dynasty back in 2019. Matt, can you give our listeners a bit of a feel of where you're at present?
Yeah, sure. We're 2 years old now. We consider ourselves in really great shape. We're growing very fast. We're 80 people right now. And we're in the middle of launching 4 new major partnerships across Canada, New Zealand, Malaysia, and India within the next 2 to 12 weeks. So we're super busy. It's interesting you should say about esports, Derek, because as you would well know, we started off essentially as an esports tournament engine, a real engagement tool. We're actually in the middle of changing our name tomorrow, December the 1st, from Dynasty Esports to Dynasty Gaming and Media, which we feel much better reflects where we are as a business at the moment. We've still got esports as that key engagement tool, but we've really layered on for our partners multiple areas of monetization and further engagement. Things like subscription services, coaching, publishing as a service, and other really interesting stuff that's coming up shortly.
Well, Matt, that's really exciting. There's quite a bit to unpack in what you just said. I mean, you're talking about new launches coming up in the next couple of months. You're talking about growing the staff to be able to accommodate what appears to be rapid growth of the company. And you're talking about a rebrand to sort of better express all of the opportunities that Dynasty has. Sounds to me that there's got to be some great technology being developed in-house to sort of facilitate all of this. Can you elaborate on that a little bit?
Yeah, I mean, there's definitely some really interesting technology being developed. We're spending a significant amount of our funds on product development. Obviously, being a tech business, obviously there's a few things that I cannot talk about because we've got competition out there. A couple of the more interesting things, and anybody in esports will realize this, particularly people that have exposure to some of the Southeast Asia markets, Africa, LATAM, in that when an online tournament is advertised by an event organizer, people pay their admission fees very, very often, and I mean sometimes up to 90% of the time. When the tournament is finished, the prize pool that has been advertised disappears and it's taken offline and nobody ever gets their prize winning. So one of the things that Dynasty's created is technology that solves that. We hold all entry fees within escrow wallet. We hold it in escrow rather within Dynasty's wallet. And then once the tournament is concluded, we automatically pay the winners of that event. So that solves that problem. We've got a patent pending for that right now. And then some other things that we're investing heavily in AI and machine learning. We created automated content around education and community. we really see the next wave of gaming monetization to be around associated media creation, which will enable our partners to grow via some of our platform solutions. And the rest I'm not able to talk about publicly at this stage, Derek, sorry.
Well, Matt, we'll keep posted, and we'll keep bugging you so you can fill us in on more exciting things as they come along. And I know that everyone's really going to be really paying attention to sort of hear how those and watch that space. Exactly. You spoke about monetization just now, about your partners, and that's actually pretty exciting. And I think that you guys have a revenue model that allows you to share in that monetization of that your partners are experiencing. Can you elaborate on that a little bit?
Yeah, sure. So when we first started, we kind of positioned ourselves as a pure SaaS business. So we would deliver and deploy our white label platform for our partners. And our first couple of contracts, we basically charged a monthly license fee, and that was it. Look, we think that's still a great business, particularly when you achieve scale. But what we found was, particularly with our telco partners, they really wanted our assistance in terms of driving, building, developing the platform on the customer side, and really building out that ecosystem and building in areas of monetization. So where we've evolved is that pretty much every deal we do at the moment, it still has that SaaS element to it. So our overheads are immediately covered because everybody signs up to a minimum of a 2 years SaaS fee, usually around $1 million in fixed fees. But what we've evolved into is a kind of fully managed service business as well, where we will work hand in hand with our partners. This is why we don't have too many partners, because we do kind of a deep partnership in each of the markets that we go to. And we'll put a team around each partner in terms with regards to building out and really maximizing that opportunity around multiple areas of monetization, like voucher sales, like bringing in some of some global publishers in terms of them doing campaigns, like cloud gaming, like we've partnered with Gameloft around some cloud gaming solutions, like data packet sales, and all of those things that kind of really make it worthwhile for our partners. So every new partnership that we're currently doing is a combination, so a hybrid commercial model of fixed fees, but revenue share upside. And we're really excited about that upside opportunity. And just to give you an example, so the revenue share that we enjoy is between 20 and 50% of all platform generated net revenue over the duration of the agreement. So that's where we see, the really exciting opportunity in the blue sky for Dynasty from a commercial perspective.
Well, that is really interesting. I mean, the hybrid commercial model, SaaS plus, if you want to call it that, whatever you call it. I mean, certainly our listeners can appreciate participating in the upside, as we're all hoping to participate in the upside of Dynasty. What is that model meant to Dynasty's bottom line?
Well, I mean, that remains to be seen, because we're launching some significant partnerships at the moment, and our early contracts, as mentioned, were SaaS only. But everything that we're launching right now is that hybrid model, where we forecast, and I've already talked about, we've got an average of $1 million fixed fee for a 2-year contract. Where we see that managed service revenue share opportunity, we're forecasting an average of $6.5 million over a 2-year agreement for that portion of our revenue mix across our portfolio. So significantly more than just the fixed fees.
Well, that sounds amazing. It sounds like Dynasty is really sort of firing on all cylinders in terms of its business. We've talked about expansion. We've talked about new customers. We've talked about your revenue model. One of the things that we've spoken about in the past, and I know that our listeners are keen to hear an update on, is your IPO, the plans for the IPO, and for future fundraising.
Yes, so we'll be in a position to IPO towards the end of the first half in 2022. We've already got lawyers retained. The auditors are finalizing the 2 years financials. So we will be in a position to list in Australia on the ASX kind of April, May next year. Having said that, we're fully focused right now on executing extremely well with these partnerships. when we do list, we want to be in a really strong position, have the right story. We're currently forecasting running into profitability again around Q2 next year, generating free cash flow. We want to have the right story. The timing's got to be right. And at the same time, we're currently in dialogue with a very large technology business about Dynasty, and also a couple of telco venture funds.
Well, Matt, it sounds great that you're positioned to be opportunistic about that, which as investors in Dynasty, we like to hear. The other thing that I like to hear from what you just said was the fact that you don't need the money. Obviously, with options in front of you and not needing the money, it sort of puts you in good stead in terms of timing of the fundraising, the pricing you can achieve. But given the fact that you don't need the money, how would you see using any future funds raised?
So if we went out and we did an IPO, funds raised, we would look to move up that value chain and move more into publishing. Obviously, we'd like to scale the business. We're proving that out with the partnerships that we're currently launching. We're talking to a number of other large businesses at the moment about partnering with those guys. So yeah, it would just be building our team and moving up that value chain. It's also worth mentioning as well that there are possibly other options on the table in terms of an alternative to IPO. We are in discussions with a significantly large, one of the largest technology companies in the world right now, and a couple of telco venture funds who are really interested in what we're doing.
Well, Matt, it sounds like there's more reasons for us to keep watching this space, to hear more Dynasty updates in the days to come. Matt, thank you very much for joining us today.
Thanks, Derek. It's been a pleasure, and thanks for yours and Blue Star's support from the beginning. We really do appreciate it.
Thanks, Matt. Dynasty is a success story for Blue's esports portfolio. Based on Dynasty's last fundraising round, we're carrying Dynasty at a bit better than 5x our investment. And based on what we've heard here today from Matt, there can be no doubt that Dynasty has nowhere to go but up. Thanks again, Matt.
Thanks, Derek. We really appreciate your support.